We've had a really bullish technical signal in today's trading in WTI crude oil, and that is a golden cross. A golden cross is when the 50-day moving average crosses above the 200-day moving average. Now, what's important, this is a signal and it's a confirmation signal that there's been a change in trend and an uptrend. So if you have a sideways trend and the moving averages are just crossing each other back and forth, it doesn't count. But in the case where you have a downtrend turning into an uptrend, a golden cross can provide a very strong technical confirmation signal, and we've had one today in WTI crude oil. I'll bring up the chart here to show it. We had, since the crude oil had been under distribution through most of 2015, particularly into the winter, we've had a double bottom here in January and February. Look at that beautiful hammer candle that marked the bottom, positive RSI divergence, and now we're seeing crude oil start to go back up. We've had we got a little bit overbought recently. We have leveled off, but so far this looks like a consolidation in a rising trend. We had a base back here, rally, consolidation higher level, rally higher level, rally higher level, rally, consolidation at a higher level again. This is a staircase accumulation pattern looking quite strong for crude oil, and with the potential for further advances, potentially with next resistance in the $48 to $50 range up in here if we do break out of this range. But look at this here. I've circled the golden cross. You had a long downtrend in the 200-day moving average. It's flattening out. The 50-day has already turned up, breaking through it to the upside. That's a very significant bullish technical signal for crude oil. I'll just quickly also note here on the 1-minute chart that happens because we're also getting positive fundamental news on crude oil. We're overseas. We're seeing supply disruptions, although but the big thing we got today was, look at this beautiful spike here to rally up, bust through $45 and continue carrying higher. And the most important part, why? Big drawdown in U.S. inventories today. DOE oil inventories fell by 3.4 million barrels. The street had been expecting an increase. API last night had pointed to an increase. So this is quite significant. Also, the gasoline inventories also fell by 1.2 million barrels heading into driving season, which starts at the end of this month, with Victoria Day weekend in Canada and Memorial Day weekend in the U.S. and the late spring bank holiday in the U.K. So summer driving season is coming, and we're also getting a spike in gasoline prices. So this is quite significant. We do have a very strong technical pattern boosted by a strong strengthening fundamentals and signs that the U.S. oil market is coming back into balance. I'll just quickly here show that we're getting strong interest in energy in general. In addition to the crude oil price, we have Brent also breaking out here, and Brent is also poised for a golden cross of its own. I'll just highlight here on the Brent minute chart. You'll see here when you get a sideways trend, as an example, on the 1 minute, these crosses of the averages happen more frequently. So that is not a golden cross there. This is a golden cross over here, just to be clear on that. So this is quite significant, and back here we had actually a failure in Brent of something that was inching towards a golden cross, and then we had a further downtrend. This time it looks like we're getting close to a confirmation in Brent as well. And I'll just finally highlight the gasoline chart. Also picking up quite strongly here out of a base, and we can see here the spike on the inventory news. So strong interest in energy today. This can also drive interest in energy stocks and also in energy sensitive currencies such as the Canadian dollar, the Russian ruble, and the Norwegian krona.